Just to make sure everyone is in the right place, this is the payment from now to the future session. So thank you so much for joining us. I just want to make sure our moderator is here. Okay, you're here. Glenn from Royal Cup. Yes, thank you so much for joining us. So you can take your seat. So we have Shola Akinlade. Shola Akinlade. I hope I'm pronouncing your names right. And if I'm not, I apologize completely. From Paystack. We have Miranda Perumal from Visa. Luke Schwarzkopf from 5 West. Drisha Kirkman from Paymentology and Jay DeHal from Mashnet. And now I will hand over to Kian Kasiri from Ruralika. Does everyone have a mic?
We can share.
Oh, we need a chair. Sorry. As a moderator,
yeah, I can just move around. Hi, everyone. I've never moderated before, so I don't know how things work. But my name is Kian. I run a microfund called Rallycap. It's a fintech fund investing across emerging markets. We've done 65 investments so far, only in B2B fintech, only at pre-seed stage. We're backed by Tiger Global, Addition Ventures, BTV, a bunch of other massive US VCs. And yeah, today we'll be talking about the future of payments with some of the smartest payment people in the room, in the continent, but also in the room, probably. I hope so. So yeah, well, without any ado, let's start with brief presentation, just 1 minute, who you are, what you do inside your company, and what is your company trying to solve. Jay, you want to start?
Sure, thank you. My name is Jay DeHal. I'm a co-founder of a company called Marknet. We are a payment API infrastructure layer, help small businesses and fintechs to enable their users to operate from US to global and build a cross-border payment applications. We are on the infrastructure layer so that we help behind the scene to power them so that they can move money from US to global. So we're a US-based company, but helping a lot of African clients to originate USD, to onboard users in the US, as well as on a global scale.
Yeah, thanks. Good afternoon, everyone. My name is Shola Akinlade, co-founder and CEO at Paystack. Paystack is a payments company. We help merchants accept payments from their customers. We're live in Nigeria, Ghana, South Africa, Kenya, and a few markets. We launched, I'm the CEO and co-founder. We started Paystack in 2016. And we just started because, I think I just wanted I wanted something to work. We always wanted Stripe or PayPal, and those things didn't exist. And I thought there was a lot of opportunity. Now I think the vision is even clearer. I think Africa has 17% of the world's population, but just 2% of the world's digital commerce. And I think that's what Paystack is trying to close. That's the gap we're trying to close. And I think we're making progress. My favorite stat about Paystack and our progress is that when we started in 2016, we became the first Nigerian company to get into Y Combinator. Y Combinator is a Silicon Valley accelerator. And when we went to Silicon Valley, everybody was like, yo, the market is too small. Like, how many people pay in Nigeria? I don't know. But funny enough, looking back 6 years later, Paystack is doing more than 40 times what Nigeria as a country was doing in 2016. And I think, for me, that's the power of the future. And that's why it's just very interesting. And I'm always excited to be part of the people building the future. So I'm excited about this panel. Yeah, thanks.
Hi, everyone. My name is Miranda Perumal. I'm the head of digital partnerships, fintech, and ventures for sub-Saharan Africa at Visa. What is Visa? In a very simple way, we're a global network that connects merchants and consumers through technology and infrastructure. And my role specifically is to build partnerships, right? To work with non-traditional players across the region to solve real problems on the continent, and do that through innovative technology and execution that is key. Thank you.
Hi, I'm Luke Schwarzkopf. Back in 2017, I first noticed an opportunity to do something in crypto. So I ran an ICO and managed to raise $50 million with a couple of my friends. So we used that to spin off into an investment company, which I ran for a few years. I then became a quantitative trader running market neutral strategies where we churned over about $1 billion a month, having long and short positions, number of legs, different crypto exchanges. Got a bit bored of the high-stress trading life, so I swapped that for the high-stress payments life. I'm now the CTO of 5 West. Basically, what we're trying to do is allow everyone everywhere to manage their money, especially in Africa, more effectively by giving them access to crypto and providing them with services that allow them to utilize that crypto efficiently in their daily life for making payments to merchants, to ordinary people, and all sorts of things like that. We just want to optimize people's financial life, essentially, and crypto is the means.
Hey, everybody. I always feel like these things are almost like, giving your dating bio when you first come in. Hi, my name's Trisha. I thought I'd tell you a little bit about myself, but trying not to tell you too much about my age. But I was part of an original startup that was South African born in the 2000s. And we were called Tutuka. And essentially, we are a payments processor. And we brought non-traditional payments into the country, starting off with things like gifts, vouchering, payroll, virtual cards, expanded the company and grew into a global processor. We're now live in about 18 African countries and 49 countries globally. We power cards and payment solutions for some of the big brands on the continent, including Safaricom, MTN. You guys sitting in this room, if you're South African and you've got some card in your wallet that's probably not issued by a bank, 9 out of 10 times it would have been issued by us. We're now called Paymentology. So yeah, that's me.
Super cool. What a panel. All right, let's do it non-traditional, keep it open. I mean, you probably noticed from the beginning, this is not traditional, but let's start with my first, something we hear in the street is yeah, payments are broken. We're still at 1% of the potential of fintech. We didn't even scratch the surface, all that talk. And you've been working in the field for 5, 10, 15 years. So why is it the case that, despite millions, hundreds of millions of dollars being poured into building this infra, it's still not there and people are still saying payments is broken? Sorry for the harsh question.
Well, all opinions are my own. Well, the thing is, banks make so much money by keeping everything to themselves, right? So think about it this way. When you log onto your banking app, besides actually sending and receiving money, what else is it that you can do? You can check your credit score, you can use their budgeting process, you can print out statements, all of those sorts of things. All of those things are services which could easily be disintermediated if you simply had access to your own data. But nobody wants to give up their monopoly. All the payment systems that exist, to me, payment seems like something where people can infinitely raise. Every month, there's a new payments unicorn. We're sitting with dozens of them in the Fintech conference, and it's because everybody tries to come up with their own solution, but then, in my opinion, they sort of close it off to the rest of the ecosystem. So everybody's trying to do something different and improve on it, but ultimately, it doesn't lead to supreme intercompatibility. So it's sort of like there's an old engineering story. So it's there's 7 different types of screws. We should really make one so that we only have 1 screw. Now there's 8. You know what I mean?
Yeah. So maybe let's look at your question, right? So who's saying that payments are broken? Because I think, firstly, I would disagree with that. I think that we have a very mature banking system globally, and these traditional payments do serve certain segments of the market, right? So I wouldn't necessarily agree that payments are broken. Do those payments serve everybody? No. So we do have, let's look at Africa, for example. We've got a 1 billion population across sub-Saharan Africa, 50 markets. The population under 30 is about 70%. 45% of the population in Africa are unbanked. And of the population, 24% don't have a debit card. Right? So that 24% is on traditional payments, possibly banked. Do the payments work? Yes, it does. When we look at Visa and our non-traditional partnerships to serve those segments that are underserved and underbanked, to financially include and give financial access, where we see pain points is, and I'll give an example and I'll use an analogy, right? If a farmer has seeds and they put that in dead soil, will it produce a harvest? Probably not. But the idea of the harvest is great. The idea of produce is great. The benefits that that could bring is amazing. The same with the fintech environments and landscapes that we see today. We are partnering with various fintechs and non-traditional players, some of which have these amazing ideas, unique use cases, niche segments that they're going after. But sometimes the environments in which they're plugged into do not necessarily mean that they are equipped for growth. And that is, Visa's strategy in the market to solve things like, in a non-traditional space, why aren't payments delivering what the potential is, or what the available potential is for them to deliver. And that is us working with ecosystem players. So for example, you look at this stage, we've partnered with Paymentology as a technology enabler. We're partnered with Paystack globally to solve real problems within our environments, right? And in addition to that, when we look into Africa and we understand what the framework looks like and what those environments look like, we have a lot of work to do with our regulators, with our traditional payment system, with the banks to help drive education and knowledge around how we should be looking at these segments. And that in fact, working with non-traditional players to enter the segments can increase GDP, economic growth, and overall enhance the lives of people living on the continent. So it's a very broad statement. It gets raised in almost every single panel. How do regulators support non-traditional payments? And in my view, when we look at some of our partnerships today, sometimes that is the bottleneck, and that is what we have to unlock as a start. So these fintechs have a chance and opportunity in an environment that is sustainable for growth to actually show how they can drive and fix payments in the context of your question. Hope that makes sense.
Thanks. So we have Luke and Marinda at the different ends of the spectrum. Very curious about Shola's, where do you put yourself? And I know should be a safe zone, and everything said here will remain here.
No. I think payments are very, very broken. The same way I felt in 2015 when I said, "Fuck, sorry." Payments are that's when I wake up every morning, I still think payments are broken, and maybe it's not payments' fault. Maybe I think there are other things that are broken. And
Is it your fault?
Oh, Visa. But no.
Hey, we have a partnership.
Yeah, exactly. No, Visa is the best. Visa actually invested in Paystack. But I think as fundamentally, I think it's a massive problem, especially payments in Africa. You have 1.5 or 1 billion people that need to just transact. I think it's a massive problem. I think a lot of progress has been made. I think if you think about the 4 pillars we think are the biggest problems in payments, or the biggest ways payments are broken, I think the first part, which everybody says, is inclusion. So just not everybody is included in the financial system. So it becomes very difficult to pay someone that is not included. And I think in the last 5 years, a lot of progress has been made. The second one, infrastructure. Again, if you don't have power, how would you have a phone to connect, internet? Sorry. And I think in the last 5 years, again, a lot of progress has been made on the infrastructure side. The third part of it is trust. I think for the first time, 5 years ago, being a fintech company, I used to ask myself, am I a fintech founder or a beggar? Because I'm just begging banks, please help me, help us, But 5 years later, I feel like people trust, people even know that, they've even branded it fintech, which is good. So I think there's more trust. People can download an app and say, oh, I believe this will help me. 5 years ago, it would have been harder. So there's progress on that side. And maybe the final one is just the literacy levels. I think just because we're in Africa, and I think just the literacy levels are not that, and it's also hard, I think what I used to say at Paystack, one of the biggest things we noticed was CVV. I say, what is CVV? I don't know what CVV is. What am I supposed to put? Or the date of birth, like we just did MMYY. We didn't even say the expiry date of a card. We just put MMYY. I don't know why we did that. But people were like, are you asking for my date of birth? I'm like, no, it's the expiry date of your card. So I would say that the problems are massive, and a lot of progress. A lot of people are solving these problems in different ways, and a lot of progress has been made. But unfortunately, it's still broken. Yeah, thanks.
I love this, man.
I agree with you on the payments are broken because if you ask all the engineering folks here who works on APIs and can tell how many times the API broke every single day. Now you need to go and work with the partners even to figure out where the heck the API is broken and then figure out how to fix that, right? So I think, I'm no expert in African fintech, but I come from the US fintech background whereby we work on the cross-border payment space whereby $150 trillion moves every single year. And then we're trying to enable small businesses to get into that space. And think about in the US, the money moves in the Asia it's really in 3 days, sometimes 4 or 5 days on the batch processing. And then it works on 90s COBOL system versus in Africa where things moves in real time. So it's already broken. So we're trying to fix the broken system. That way, there's so much innovation that needs to happen in this space. Luke mentioned, you go log into your bank account, there are 20 different products. What are they doing with the banking system, right? There is a lot of massive opportunity for any fintech to really, focus in niche product. I was looking at this startup that is helping a wedding, to do a wedding planning. I mean, that's a startup that is, raise Series A and whatever. So what I mean by that is there is tons of opportunities out there. Some founder inventor just needed to focus on one single step, one single product, one single problem, so they can really scale that business and solve that problem for particular needs people, right? So tons of opportunities out there, I think, and I agree how fragmented the system is, and it's still broken, I think. But on top of that, it's fragmented that the founders should really focus on building a niche product out there.
Okay, we have a majority now. It's broken.
Yes, agreed.
Okay, so, I have to back my girl up here. And it's not because we worked together for many years. I think broken is a pretty harsh word. Fragmented, yes. I mean, payments happens. Payments been happening for thousands of years. Bartering, it's some form of payments, some form of tender happens. On this particular continent, and we've heard a lot about it today, if you've been in the other sessions, is we've spoken a lot about how payments has actually evolved, and a lot of it has started here in Africa. I mean, we've solved for a lot of the issues, whether it was pioneering mobile wallet systems, getting that sort of interoperability to doing cool stuff that Paystack's doing for online and solving for the continent. So from my perspective, it's not broken, it's fragmented. There's still the need for interoperability. There's still different form factors, and it's ever evolving. So payments is never going to be the same thing. What we were doing 20 years ago, we're not doing it now. Well, except for mobile wallets, which was here 20 years ago, and we're still doing it now. So from my perspective, there is definitely a need. There is a need for new players. There is a need for the ecosystem to come together to provide that sort of interoperability, which is why people refer to this brokenness. It's not brokenness, it's fragmented. You go into every different country, every different market over here, there is payment systems. There is payment systems, eco players that are specific to those markets. Where it gets complicated is if you're trying to use something in one market and it doesn't work into the other. And that's the need for that sort of partnerships and that environment of openness. And Miranda touched on some of the things that we do need to actually focus on to get that sort of inclusion. So yeah, that's my view.
Thanks for the politically correct, nuanced answer. Super cool. So, at Rallycap and my fund, we've made 66 investments in fintech only. So I'm speaking on behalf of 66 founders, actually 132 because the average is two co-founders per company. But most of them tell us we're trying to build on rails that were actually built for the West, right? So we're either trying to Westernize and trying to force ourselves into working on rails that work for them. But there's also a new current that says, hey, it's time for Africa to also emancipate itself from the legacy system and build our own rails. I know it's a bit tricky, but whoever is...
I hope they are not building another legacy system in the US where money moves in 3 days.
Can I comment on that?
Yeah, we would. Yeah, Jay,
We did.
Jay would just tell us it was 3 days to move money in US
And
ACH
some ACS
systems.
real. So you do because the ACS system work on a batch processing. So let's say it happens like in a couple times a day. And Friday night you batch process. Then if you have a long weekend on Monday, the money doesn't move until the Tuesday morning. So if you think about if somebody needs to get paid, and then the wage does not get deposited until on a normal course of business on Tuesday morning. So yeah, kind of sucks.
Do you want to go?
I was just going to say one thing. I mean, the feedback from your 66 fintechs, right? Africa has. It's mobile money. It's M-Pesa. So we knew that way back then that legacy system may not work. And so something else was built, and it works, and it's trusted, right? And today, even though it's trusted, even though it's mass adopted, it's limiting in that it's a closed loop ecosystem. And Africa or the continent is moving in a direction where customers' needs have changed rapidly. They are different today, they'll be different tomorrow, they'll be different next week. And so, when Drisha talks about fragmented, completely aligned with that. And how do you take the payment systems that were built for Africa because it exists today and evolve that into, something bigger and broader and more inclusive and more adopted and, that actually solves for consumer needs, but also connects them to broader payment access, new innovation, new technology in terms of where the rest of the world is heading,
Well, anyone can download a crypto wallet, and that doesn't even require a trusted party.
That's
We'll have to
true,
see- we'll
but
have
what
to
do
see
they
about
do
that.
with it? What do they do with it when they download it is the question. And that's when the technology and the partnerships actually do come into play. So yeah, totally agree. I mean, there's always the sense that here in Africa, we're kind of behind a lot of things and technologies, which I don't agree with, because I mean, just looking at the room and everybody that's over there, everybody's kind of selling some form of platform or some form of new technology that's out there. So the problem, I guess, is adoption, which most newer economies, which is what we're all kind of living in this continent, does have in any case. So I think the technologies are there. It's probably just adoption, which probably brings us sometimes behind the curve. But I mean, you all heard the stats, the numbers of people, the actual potential of it. I guess it is that sort of partnering up with people and the right tech that will encourage those adoptions.
Shola, do you mind including AML and KYC into your answer? Because a lot of, I see on Twitter, even on Paystack, people say, when do we have access to Shopify? When do we have access to this? When do we have access to this? And mostly it's not you not wanting to give them access, it's them not wanting African volume because it's weird volume. But why is it weird?
Yeah, I guess that was going to be my surprising perspective to say that while it's very true to say that the financial system that we're building on are very old, I worry that some of the newer systems are not standardized enough. And sometimes as a merchant aggregator, like for us at Paystack, we work with lots of merchants. And merchants also can't just tell consumers how to pay. So in a very fragmented world, I feel like the newer channels or the African channels are not standardized enough. And it's a pain for merchants. And I think I'm backing up to Visa has done a lot of work all these years to create standards. And these standards were there for a reason. And now, and I'm not, MTN is a very good company, I love them, but a world where MTN creates their standards, and then M-Pesa creates their own standards, and Vodafone, they create their standards, and then the merchants are just like, what am I supposed to do? And then the consumers, So I would say that it's actually getting very chaotic. And that said, I think there's a lot of progress happening. I think when you talk about AML and KYC, I also think that again, some of these things are there for a reason. And I think that's what makes a good fintech and a bad fintech, I feel like, is your application of the rule. Like, why is this important? And what problem are we solving? And there are always multiple ways to solve a problem. And again, coming back to it, I feel like the solution sometimes is not, oh, we're not doing KYC. I don't think any fintech will tell you that. They will get into trouble. The solution is, how can we know our customers better? And what are some of the tools we can do to prevent financing? Again, as a fintech founder in Nigeria, a lot of them say, okay, a lot of us, sometimes you wake up and you get an email from like the security services. Oh, we want to learn more about this transaction. We want to do this. We want to do that. So in reality, if you think you're starting a fintech, but you are taking on a lot of responsibility, and it comes with a lot of obligations. And I feel like the best fintech companies figure out how to translate those obligations into very simple, clear experiences for users. And that's what we are striving to do. I know we're almost there, but we're striving to do it. Yeah.
I just wanted to add one more thing in terms of how you partner up with the companies, especially for those that provided a lot of licensing rails or processing rails and whatnot in the US, where you go and then you are always in the mercy of bank to provide bank charter services or processing services and whatnot. But sometimes it's early on to jump on the hoop and sign an agreement and then work with them versus and really understand the dynamics and then how innovative the banks are, and then where they're headed to versus your own internal product roadmap, because you have a certain vision on your fintech, but the bank is in the different directions. It's not going to work. I think that's where to really help a user understand what they're getting into your product and services needs to align with your partnership with all the KYC provider, for example, AML provider, or bank provider and things like that. I think it's really important to really do a lot of homeworks before you jump in on those natures.
Typical. So as a VC, like we create our portfolio based on thesis and what we think the future of the content will be. And you can see different categories of, say, the future is going to be card first, and you're going to have most of your African consumers have a card, and the card is linked to an app, and then you can do other stuff. And then you have the other fingers, which is like it's wallets first. We're not going to see a proliferation of cards all across. And then now that you have crypto, then it's also like, how am I merging these two paradigms into each other's? And then a lot of the large fintech players, and we're talking unicorns and half unicorns, actually use crypto rails behind closed doors, but don't want to be open about it just because the word is scary, but especially, on the stable coin. So yeah, how do you think both of these the best of these both worlds are merging together to create the reality that we have?
I'll take that.
Oh, you can go first.
So I think it's also building on what Shola's just mentioned, right? So you have a fintech who's agile, fast, great technology, can access segments at speed and in ways that maybe a traditional bank can't, right? And let's park the technology that it's built on for a second. And then you get the banks in the market that today, if I just think about some of our partnerships across sub-Saharan Africa, probably 8 out of 10 with them rely on a bank to provide them with a BIN sponsorship, whether that's an acceptance or an issuance play. And that brings the license and the trust that they have with the central bank in that market. From a Visa perspective, when we partner with these guys, it is really around the security, the trust, the reliability, the legacy that we have built as Visa, a global payments network that our fintech partners can leverage and build on top of. And it doesn't necessarily mean that it's either going to be a card or it's going to be crypto or it's going to be something else. It's an experience. If you are delivering a payment solution to a customer, it doesn't necessarily mean that they have to see a 16-digit PAN number with a CVV and an expiry date, that they think that is their date of birth, right? but it is the experience and the UI and the channel in which these payments are being delivered to a customer to include and give access. So, a cliche term is let's meet the customers where they are. And that's why today, when you look at our partnerships, you look at our MNO partnerships where we are accessing and enabling mobile wallets and connecting them to global commerce, across our 70 million plus merchants. It is, yes, it's an open loop transaction that can be delivered in an app or in a USSD. Now, who would think that a customer sitting, with a feature phone that is dialing *111# every day can access an e-commerce transaction, but they can, right? And I think that in terms of the ecosystem and delivering payments that really serve the segments that are unserved today and unbanked and don't have access, needs to rely on the traditional players and collaborate with them to build out the frameworks that build trust in a market and that actually allows for fintechs to deploy their solutions, again, in an environment that is supportive of the growth.
Cool. I just wanted to make a comment on there's sort of a contradiction in terms of making crypto easy to use, such that it can be integrated into like the global payment system or be as easy as cards. Because when you're speaking about something like cards, the reason why it's so easy is because you put 100% of your trust in the cards and the payment processor. The whole thing about crypto is that it's about being fundamentally self-sovereign and having a self-sovereign identity and a self-governed economic system. So in order to make something easy, you have to inevitably give up a piece of that trust to someone else who is making the thing easier for you. So there's always a bit of a trade-off between making crypto easier to use and then losing the true benefits of what the true crypto believers think are important. So for instance, let's say you're using an app which makes it so that you don't need to have any understanding of your private key and what that means. Then how do you know that that person who is performing that service for you can't access your money? How do you know if you're using a self-managed wallet on Binance that they can't just transfer all of your money out of that account at once? What you're essentially using at that point in time is a managed service which uses crypto in the back end, but that's almost irrelevant. They could be doing anything on the back end. If you want to use crypto properly, you unfortunately need to understand the risks of the technology and know not your keys, not your coins, and need to know how to use it, which sometimes makes the job of integrating crypto payments into general society quite difficult. So what we're doing is allowing people to very easily exchange crypto into fiat currencies in multiple countries in order to make instant payments with crypto. But when you make it too easy, i.e. you manage their wallets for them, I think that you lose a lot of the benefits that crypto has to offer, that being trustless.
Yeah, happy to move on. Can you just share with me a problem that you're obsessing about and trying to fix really actively, and just give us the positive news that it's going to be fixed within a year or two, just so that we have an understanding of where we're heading at, if not too confidential. So any problem you're obsessed about and trying to fix over the next year or two?
Yeah.
Sure. I mean, I can talk about what we're building in MarkNet, and then I said earlier about cross-border payments is huge, about $150 trillion moves every year. And the big piece of pie that is actually getting consumed by the legacy banks out there, on SWIFT transactions and whatnot. So what we're trying to do in our ecosystem is basically building a platform and enabling all the fintechs around the globe so that they can have their own needs product, either it's a P2P remittance or B2B payments or global bill payments and whatever, build something like, cross-border Venmo, wallet services, whatnot, so they can, take some piece of pie out there from this big legacy bank and build on their own per the particular needs of either a diaspora populations living in the US or could be some subset of populations, so they can cater that services through the ecosystem. So I think, the payment system is going to evolve, and I somehow agree with Luke about the crypto and whatnot, but there is a long way to go in my opinion, because I do come from traditional finance. We work with the regulators in all 50 states in the jurisdictions in the US and how reluctant they are. And some are pro, which is good, right? And I think there's a lot of push out there in regulations as well. I'm hoping that being on the infrastructure play, and then as long as the regulation allows, we'll also do a lot of things on the crypto end and enabling our, platform users to pay in and pay out on cryptos. So yeah, a lot to see in a couple of years. I think 2 years is very short, Kian.
Yeah, I mean, from our perspective and being a processor, I think what we've seen over the last couple of years is the move to a lot of digitization in payments. And that's kind of where we see ourselves investing in. And when I say digitization, it means a lot of form factors. I mean, we talk about card, which will still be around. But you've got other things. You've got other technologies. You've got to do NFC. We've got to move everything into wallets. In this continent, we now have Apple Pay, GPay available. So how do we make that move to cardless transactions more seamless for our customers and for the consumers themselves, so they can actually understand how easy it is to do some form of payment transaction. At the same time, it is the likes of crypto. I mean, we've seen in other markets where crypto has had some form of, or has been introduced into the formal payment sector. So in this continent, it hasn't happened yet, but we do believe that that will happen fairly soon. So it's working with partners that are in that digital environment and trying to create a very seamless experience for the actual issuer of the cards, whether it's a fintech or a bank or an MNO, to the actual consumer who's able to actually use this without having to think, oh, I have to do this. What do I have to do next? Why is it not working here? How can I make it work easier? So I guess that's, as a card processor, that's kind of where we're investing our time and energy, is to make that whole process very seamless and very easy in the background. So you never have to know there's someone actually doing it.
I think, I think for us and for me personally, I think one of the biggest things is just the challenges of scale and reliability. Like, how do you get better as you get bigger? And to put it in perspective, it's like cooking. I'm not a very good cook. In fact, I don't know how to cook. But cooking for 2 people seems very easy, right? And it's okay. Actually, I can cook for 2 people. But imagine having to cook for 2,000 people, and then the meal has to be more delicious. Just imagine what needs to happen at the back. And the same thing with payments. You know, like if you do like 1 million transactions a month, and your reliability is at 90%, which you think is good, that's 100,000 transactions that are faulty, right? But as you get better, once you start doing 10 million transactions and you keep your reliability at 90%, you're going to have 1 million issues, not 100K. So that means as you get bigger, your reliability has to scale to keep your issues the same. And so it feels like a very complicated mess. And I feel like that's usually the biggest problems, especially even in Africa, where like you have this company you really like, and then they get bigger. You're like, why is this company misbehaving? You know? And I think for me, it's very important that we build a company that can get better as we get bigger. Yeah, thank you.
Cool. I guess what I'd like to do is just allow millions of Africans to be able to pay and transact for daily things in their lives using crypto. And the reason why I'd like to do that is perhaps interesting. It's because of how it can change their savings behavior, I think, is my primary motivation. So many people in Africa don't want to keep their money in the local currency. All of these currencies are, many currencies are rapidly depreciating. There's just not, there's not good supply of foreign currency in countries. For instance, in countries like Nigeria, the amount of dollars is like rationed per individual. You can't just get an unlimited number of dollars. So if you allow people to pay for ordinary daily things in crypto or even in stable coins, it means that they can then keep their wealth in that and then also use that to transact in their daily lives to protect them from inflation, or even just in some countries in Africa, the rule of law is not that strictly enforced. People don't want to buy property there because there's risk of appropriation, etc. So really, if you allow people to run their daily lives with crypto, it means they can save in crypto, and that protects them from all the issues surrounding their local currencies.
Super cool. Thanks, guys. I'm being told we're out of time, so one last round of questions. So first of all, some of the most boring panels is when everyone agrees and everyone comes from the same school of thoughts. So I want to thank the organizers for picking such diverse backgrounds and school of thoughts. And it's totally okay to disagree, and it's actually making it more fun. But yeah, as a last question, if we have founders in the room or investors in the room, where do you advise them to go to look at opportunities? whether for building or for investing?
So I'll comment on this. I think that it's a tricky one. And it maybe ties into your previous question too. I think right now, what we need to focus on is building solutions that work, that are available and are accessible. And if we are really, truly punting, the objective of financial inclusion and financial access, then we really need to do a better job as an ecosystem of ensuring that execution is key and that the players in the market that we're partnering with are able to deploy their solutions, acquire the customers, understand the CVP, understand the customer needs, and that they rely on partners like Visa, to build both sides and broader parts of the ecosystem, acceptance points, issuing points, but lead with innovation and technology, right? And I think if I can just kick it old school for a second, it's great to look to the future 5, 10, 15, 50 years from now to understand where innovation is going, what investors should be looking at, what is the future of fintech in Africa. And I think for us, for now, let's just get a bit practical. Let's go back to the basics. Let's support the partners through the ecosystem to just enable and deploy. And if you say you're going to issue 5,000 cards or onboard 5,000 merchants in your first 6 months, let's help you get there, right? Because that is when you're really deploying payment solutions and experiences that are actually driving an impact across this continent, which I think is something that we need to just shift and refocus on. Right. In terms of, the feedback that we've been getting from some of our fintech partners is, we first need to deploy my MVP product, get this many customers, and then we will attract the right type of investment. And when we're looking at those solutions, there's broader views that need to take place and, a bit of a mindset shift to say, it's not just the actual one product, right? It's not just a card that you link to a wallet. It is, how are you building in things like potentially crypto? How are you building in things like giving access to lending? How are you creating a value for a customer to shift that question that we always ask ourselves is, how do you influence a consumer to move from a cash-driven transaction, which they know and are used to, into a non-cash transaction? And that still remains, the number one question. So when you're looking at fintechs and when you're understanding, the value that they bring and the problems they're trying to solve, that is extremely important. The quality of the solution, the segment that they are targeting, what problem are they solving, do they have enablers in that ecosystem that can help them execute, who are they, and then what does that roadmap look like where you start with one thing, you get it right, and then you scale it. That would be my view.
From my side, to investors out there, my bank account number is Standard Bank. I'm kidding. I think the opportunity for investment is really great, especially on this continent. You look around, everybody over here has something great to offer, and a lot of them are in need of investment. What I would advise, having been through a few rounds of investments, is when investing, especially in these fintechs and startups, Miranda is right. Make sure that it's actually, the tech is real. It's something that is applicable to that market. Because, if you're trying to sell a technology that's way out in the future and it's just not going to be relevant right now, it's just not going to work. But to investors, it would be along the lines of actually forming a partnership and not just giving someone money and then setting them a target and saying, I want you to turn this 10 million into 100 million by the end of this year, which a lot of fintechs then, fold under and get that sort of pressure. It's more along a partnership. It's more around also, because you've done so many investments like Kian, it's around how can we also assist you in terms of some of the education about where you should be putting your money in, what you should be doing as a business, what type of targets you should be setting. If there is partnerships that they could leverage off through the investment of perhaps other players within that investment portfolio, it does make a difference. Because at the end of the day, we're all part of a greater ecosystem that's trying to solve for the end consumer. So it's really about partnerships and making that work is what I would say is the value of an investment.
If I could give some advice for people looking for investment exposure to crypto businesses, it would be if you interrogate the ecosystem of a given crypto project, make sure that the majority of ecosystem participants are actually users and not just speculators. So what I mean by that is there is a metaverse company that was valued at over $1 billion that after investigation found it has 27 people who actually play the game. But there were millions and hundreds of thousands of investors pumping the price of that token, hoping for speculative returns. So, I mean, I was incredibly bearish on those metaverse projects. I still think the word metaverse is very stupid. The biggest metaverse ever is World of Warcraft. I played it in 2005. It has 150 million users, and it makes Blizzard $1.5 billion a year. That's a successful metaverse. So really, yeah, it's to look at the actual users of the project, look who's excited about the project, look if they're just talking about the price of the token or what the reward scheme is or what the APY is of the project, but look if they're actually using it. If it's a game, do they want to play the game? Is the game fun? If it's not a game, is the ecosystem useful? Are they actually using it to make payments, or are they just trying to earn return on the hype? I mean, that would be my advice for evaluating crypto projects.
I think for the founders, in the last couple of years has been the FOMO that we've been seeing a lot of term sheet going around, deals getting closed in a week or maybe less than a couple of days sometimes, but the things have changed now. A lot of funding has been frozen. And I think part of the reason could be because there's so much money pumping in the VC market. And then the founders, some legit founders, getting funded, which is good. Congrats to them. But in some, kind of like Luke mentioned about, scamming the system and trying to really show fake papers and whatnot. So I think, really partnering with the founders, believing on the team and believing on what they're building and solving a true problem. I think that is probably one of the key aspect of, fundraising. And then the second portion is about, are these a true problem? Is there enough market that, these founders are solving? And then if there is a true problem and then the problem is getting solved, I think that's worth investment. So I think, a couple things about, a team member and then a VC is a strategic partner for them, and can they actually help them grow the business? I think those alignments needs to happen for founders and from the VC perspective as well.
For me, I think I'm very passionate, and maybe one of the opportunities I'm hoping people can help accelerate is things to improve the quality of life when you're living in Africa or for Africans. And I think depending on who you are, if you're B2C or B2B, I think on the B2C side, I think it just like make it easier for me to live in Africa, and I think people are doing good. I see Flex Club there, just like making it easier to get car subscriptions. I think investors and founders should continue to build things to just make life easier and happier, and I think things are happening. On the B2B side too, the same thing, I think, help improve the likelihood of success for businesses. I think when you start a business in Lagos or Lusaka, and then someone else starts in London or other city starts with L, I can't think about it. But you can already tell who is going to be more successful. And it doesn't have to be like that, You should, why is it easier for me to buy something from someone in California than from someone in Bamako in Mali? Like, why? Mali is closer, But exactly. So I think on the B2B side, just help make it easier for businesses to survive and thrive in Africa. Yeah, cool. Thanks.
Thank you, everyone. Organizer, do we have time for questions? Organizer, do you have no questions? All right. Well, let's get back to work.
Thank you.